Good evening, everyone. Stan, can you hear me?
Yeah, I can hear you.
All right. I'm audible enough, yeah?
Yeah.
Okay. Can you see my screen?
Yeah, I can see.
All right. So good evening, all of you, and welcome back to another class on entries and entry models. The last class we had, I introduced entries where I talked about two types of entries. I talked about the type 1, or which you can also call it model A, and I talked about what the type 2. This is a type 1 where price creates when price reaches a low and then impulsively continues to do what? To break the previous high, then put in a structural liquidity, and then pull back to the order block and buy. And I talked about type 2 model where price does what? Creates the structural liquidity before you actually break structure, right? Which I told you guys that the type 1 is what of higher probability, and which will be our major type of entry model when it comes to entry models on order blocks, right? Now you remember that we also introduced other PDRAs minus order block. Now this type 1 and type 2 type of entries are just entries based on what order blocks, when you're taking high probability entries as per order blocks. Do you understand? That is when these entries are essential. Now, there is another entry model that I would like to add to the class, which is what the reclaim blocks. Remember that we treated reclaim blocks when we're doing PDRAs. So it's what you know about reclaim blocks that I want to talk about now. All right? But then here's the thing. Remember that the reclaim blocks we treated, we just did examples of what order blocks being filled, and then creating what price, maybe something like this now. Another block is taken out, and then price comes back to what mitigate the other block and just buy like this. Right? We're using this type of reclaim blocks, order blocks, and all of that. But then what I was trying to say before I ended the previous class is that in any case that you want to take a buy from a reclaimed block, it must be a reclaimed block that was created by a valid order block. Do you understand? Let it be that it's the failure of a valid order block, right? You need audacity to be able to place your trades, whether you like it or not. You need to have a certain level of confidence when you're placing your trade. And this level of confidence will be given to you when you know that this trade you're executing is what a high probability setup. Do you understand? It has to be what a high probability setup. So it's not like you just every other block in the market fails and then you start looking for reclamation. Most of them will not reclaim. Price may leave you all of that. Do you understand? So it has to be that you have a valid demand zone that was taken out. And then that now creates what you now anticipate that demand zone is what going to be reclaimed, or valid supply zone that was taken out, and then you now would anticipate the reclamation of that supply zone, which means that instead of trading something like this as the reclaim block, what I'm trying to say now is that instead of something like this as a reclaim block, you're looking at what something like this, where a reclaim block is being created by a valid order block. Price probably takes it out, then pulls back to it and continues, right? Reclaim block being created by what? A valid order block. This is one scenario in which we can use reclaim blocks as our entry model. This is what? An X. This is one case scenario where we can use reclaim blocks as what? Our entry model. The second case scenario is when the reclaim block may not be created by a valid order block, right? Maybe the order block that created the reclaim block did not meet some of your criteria, which means that reclaim block in question must have structural liquidity or a form of liquidity. More like something like this happens. Do you understand? Something like this happens. You're not anticipating the price sweeps it and what continues. Something just like this happens. I don't know if you guys can be clear. Here's what I'm trying to say. Though. So let me take it again because I guess I may be overwhelming. Okay. So here's what I'm trying to say. I said that when it comes to entries, right? Remember that we did PDRAs. Now these PDRAs are what orders of entries, where I said that you can see mitigation block as your entry opportunities. You can see what breaker blocks as your entry opportunities. You can see what order blocks as your entry opportunities. You can see reclaim blocks as your entry opportunities. It can come anyhow. Do you understand? But then when it comes to other blocks, now when you see an order block as your entry opportunity, what happens? You're looking out for what? The type A or the type B type of entries. So when it comes to other blocks, right, your entries, or when it comes to demand and supply zones, your entries must be what? Either type A or type B. That's either type 1 or type 2. But when it now comes to reclaim block, I'm talking about reclaim blocks now as an entry model, right? When it comes to reclaim blocks as an entry model, two things must be considered. Number one, was the reclaim block formed by a valid order block? You guys remember how to validate an order block now? Your break of structure, your trend, your imbalance, your premium discount, your inducement, your sweep, right? Did these order blocks are filled? Did it meet all of your criteria? If yes, then you can take the reclamation on that other block even without an inducement or a significant inducement. Do you understand? That is the only excuse you should have when taking a reclaim block without an inducement, that it was created by what? A valid order block. But in any case where this is not the situation, your reclaim block must have an inducement before you trade from it, which I now represented like something like this now, right? Price takes this out. Okay, now you must anticipate what the price puts in structural liquidity before you consider this is what a valid reclaim block to buy for. All right. So once a reclaim block is being formed by an order block that is not another block that has met your validations, it means that what you must anticipate that it creates a form of liquidity or a form of inducement before it approaches your entry. So that's what I'm trying to say. So this is one of our reclaim blocks entry model, and this is what another of our reclaim blocks entry model. The difference between these two now is that this was not formed by a valid order block, but this was formed by what? A valid order block. All right. So this is for the reclaim blocks. But then if you look at the other block now, type 1, remember what I talked about type 1? How is the type 1 entry model like? Price takes out a low, preferably an external low, but then I told you that internal lows count as well. And then it goes ahead to impulsively put in another high. And after putting in that high, what happens? It pulls back into 50%. Remember that I told you, like this now, you're going to map out from the low to the, and make sure that what the inducement is what inside 50%. I already explained why it must be inside 50%, right? So that it can be deceiving and luring enough for traders. So you make sure that the inducement pulls back into 50%, and after that, what happens? Price now comes down to what mitigates this and then continue to the upside. Mitigate and what continue to the upside. The same thing for the type 2 now, which is a bit different. The difference between type 1 and type 2 now is that what price creates the inducement for type 2 before actually breaking structure. You can see that this was the point at which it broke structure. So it kind of created the inducement before it was breaking out of this high to break structure. And then it pulls back to mitigate and what continue. But in all of this, you'd notice that what the most important and non-negotiable is that what price must sweep a low, right? The sweeping of these lows is that price is taking the liquidity wasting around those zones already, making it protected. You want to be buying from protected levels. The inverse for the sell, let's say in a case scenario whereby you have, give me a minute, please. Wait, this volume is too loud. All right, so in a case scenario now, where you have price moving like this, and it does something like this, takes out the high, then it possibly breaks structure, then it comes back to create a structural inducement that pulls back into 50% and does what? Sell. All right, giving you a point of interest at this point, where you now anticipate that price does what? pull back into it and it does what? Sell. This is our type 1. Okay? Our type 1 entry model. And the second one, whereby price does something like this, it sweeps a high, then does something like this, whereby it creates a level of inducement before actually breaking out of that high, making this what a probable zone to sell for. This is what our type 2. The difference between this type 1 and type 2 is just that the structural liquidity is formed before breakout in type 2. But here it is what after, right? This is how the type 1 and type 2 sales look like. They're just the inverse of the buys, right? When it comes to buying with order blocks. And when this type of valid order blocks fail, you cannot buy on their reclamation, which may not necessarily need an inducement. But when you have order blocks that did not meet your criteria for what a valid order block should be, maybe most recent BOS and all of that, then you can do what? You can now use those ones as your form of what? You can now need those ones to put in what? A form of inducement before you buy from them. That's on their reclamation. I mean, something like this now. You can see that in this case, now this particular order block, before it failed, there was no inducement, there was nothing, but I just took it out, right? So if you're going to be using this particular order block as a form of reclamation, when it's taken out, it must give you what? A type of inducement. Most importantly, like the best type of inducement for something like this now is going to be what? The structural liquidity. If you look at this very well, you would notice that in a case like this now, it's forming what? Our type A order block. Something like this now is forming our type A order block, because if you look at this now, there is now what? A sweep. And then after price took out that low, it impulsively went to do what? Break structure. Then create what? Structural liquidity, and then pull back into that level and buy. Right? So this is how you can make what? A valid buy from an invalid buy. You understand? A valid reclaim block from what? An invalid reclaim block. So these ones need structural liquidity. These ones may not necessarily need structural liquidity. If they have structural liquidity, fine. If they don't, fine as well. Right? So in the last class, I talked about doing this thing. I talked about making analysis live to show you what I mean about combining together, because you remember in the last class you just had like a surface level introduction to these entry models. But then I want us to do something today with some of the setups I took with my students at Lucky Star earlier. All right. Okay. Some of the setups that I took with my students at Lucky Star earlier. I'm trying to choose something here. Oh, gold. I think daily time frame to show you guys something. Now, when I talked about the reclaim blocks, right, there was something important that I mentioned. I told you that when it comes to mitigation blocks, not reclaim blocks. When it comes to mitigation blocks, right, it is very important that your mitigation blocks are on the higher time frame, right? That way, you know that you're not being induced. I don't know if you understand what I mean. That way, you understand that you're not being induced, right? Your mitigation blocks, if at all you're going to say the mitigation block is valid, right? It should be what's on the higher time frame when you're trading them. I think there was something on gold earlier. I think 2 days ago or something like that. There was a mitigation block on what, like 2 hours, 4 hours. Do you understand? So don't go like looking for mitigation blocks on 15 minutes. I think they're even like consecutive mitigation blocks on EUR USD as well. It's something that is occurring. But if you're going to be using these mitigation blocks as entries, let them be what from the 1 hour to 4 hours time frame above. Now, this was something I noticed on the daily time frame, which I just want to use as my example before I continue. Now, if you look at this particular point here now, this may not necessarily, this is the daily time frame though, so this is just for example purposes. It's not like you're executing from the daily time frame, but here is something that I want to point out to you. Now, if you look at this reclaim block here now, this particular one here now, this is an order block that was filled. You see here we have what? An order block 1, and here we have what? Another block 2. These two things, these two zones here now, they are both order blocks. I mean, this is point 1, and this is what? Point 2 at this point, right? So we have order block 1 and order block 2. Now you agree with me that both order block 1 and order block 2 are what? They are both, sorry, give me a minute. Is there a meeting room for the Zoom? Stan, is there anybody struggling to enter?
Nobody's struggling to enter.
Okay. So this is order block 1 and this is what order block 2. If you look at what is happening here. But let's cut price down from this point. I want you guys to notice something with me. Let's take this out from this point now. Now let's say you want to take a buy from these two things now. If you look at what's happening here now, this is another block, this is another block. But this one now, if you should try to validate it, it won't meet most of the criteria for validate an order block. Right? There was no form of inducement. And even if you're going to consider this now as a pullback, it wouldn't pull back into what? Into 50%. All right. So this is not a valid order block to take our trades from if you're following based on what I've been teaching you. For those of you that have ears, right? You would believe that this is not what another block to buy from. If better, you're going to be looking at what this one below, because this one now has what? The inducement. This one is the one that the inducement put back into 50%, has imbalance, has what? The structure, direction of the trend and all of that, right? So meaning that order block 2 is a valid order block. But order block 1 is what? Is not a valid order block, right? You can see the two of them. Now, here's what I'm trying to say. You know that when this order block 1 fails now, there are people that will now be looking at, okay, Star said that once another block fails, we should just buy from that other block. We should just buy from the reclaimed block, right? There are people that will be looking at something like this. But here's what I'm trying to say, that when you have an invalid order block, which in this case now, you can see that type 1 is what? Is an example of an invalid order block. We need another block that before it fails. You remember that when an order block fails without a reaction to it, it creates what? A breaker block. And when that breaker block fails, it creates what? A reclaim block. So my point now is that when an order block that is not valid, that you wouldn't have traded from in the first place, fails, which is like another block like this now, that is what? Another block that did not meet your 6 criteria. When it fails and you have to take a reclamation on it, make sure that reclamation gives you what? A form of inducement, preferably structural inducement, before you decide to what? Buy from it. So meaning that in a case like this now, this is what you're looking out for. If it doesn't create something like this, you have no business doing what? Setting buy limits on it. The only reason why you would want to take an order block trade, a reclaim block trade without an inducement, is if it was created by the failure of what? A valid order block, which in this case now is what? This type 2 order block. Maybe price now does something like this, pulls back, you can buy. Do you understand? So long as the failure was caused by what? A valid order block being filled. But when it's an invalid order block, those ones that you see without inducement and all of that, they must do what? They must give you structural inducement. If not, don't take trades from them, right? If you play price now, let me show you what price did on these 2 other blocks. So you see, the both of them were filled at the end of the day, whether you're buying from type 1 or type 2. Can you see that the both of them were filled? Now, if you look at what price did at this point now, there will be people, you see that price after failing this, the first one and failing the second one now, a lot of people will be looking to buy from this second one now, right? Since they will think, okay, the first one has even been ignored, and then set their target somewhere here now. And you can see that price mitigated it and was going to the upside. But look at something that happened. Remember that I said that this thing is what? Wrong to do. Why is it wrong to do? The order block was not a valid one before the failure. And secondly, it did not give us what? A form of inducement. Because if another block is invalid, you must have what? A form of inducement before trading off it. Right? Now playing price, let's look at what price does after that. You can see that it was going to the upside. When they're like, oh, I'm in profit though. And what happens? Price comes backwards to take them out. Right? Why did price take them out? It took them out as a form of inducement. Right? Price took them out as what? A form of inducement. Creating inducement for what? This one below, this valid one below. And you can see that this valid one below now has what? An inducement at this level. People that were looking to buy what? At this level becomes what? A form of inducement for it. And then what happens? Price comes, mitigates it, and what? Continues to the upside. Now you can see that this type of order block now is giving us what? Our type A, type 1 type of entry. Because here now you have what? You have your sweep of liquidity, right? and then price does what? Break structure internally, pulls back, creates another break of structure here, then pulls back to the other block and continues, just like this, right? So what I'm trying to say is that invalid order blocks must have what? Structural liquidity. Valid order blocks can be traded without what? Structural liquidity. So back to what I was showing you on my chart, right? Now, minus, so I mentioned in the last class as well, where I talked about doing your analysis from down to top, right? Doing your analysis from down to top, where you can have an analysis on the 1 hour. You know, people can go as low as 15 minutes and all of that to get entries. But for the purpose of this class, I want you to understand, right? I won't always be there for you. Afterward, this is like a year mentorship and all of that, right? I won't always be there for you. And I know that some of you, after this class, you're going to tweak most of the things that have been taught to what works for you, right? But then I want you to consider what I'm saying first before you start all of those tweaking, for you to understand that for the purpose of this class, you need to have it in mind that your POIs being on the higher time frame gives you an edge. Forget the fact that you see like 10 trades a week when you're trading on the sorry, I'm kind of like having an invitation. Forget the fact that you're going to see like 10 trades a week when you're trading on the 15 minutes time frame. But then you have to consider the quality of your trades as well. It's not just about quantity, right? Whatever trade that you're putting money on, so long as you're putting money on it, this is not demo stuff, right? Because you obviously cannot do anything with money from demo. You may increase your dopamine levels and all of that, right? You have all the adrenaline rush that you need, but at the end of the day, you can't withdraw it. So it's useless. There's no difference between you and somebody that has not heard of trading before. There's no difference between you and somebody that's not making money from trading if you can't withdraw those numbers that you're posting. Do you understand? So at the end of the day, you want something that you can confidently risk money on to make money from. And that is why I'm emphasizing on forget the fact that so many things are occurring on the lower time frames. If you're going to look for POIs, you can even use the 1 hour. The 1 hour is fair. Do you understand? The 1 hour is like a bridge between lower time frames and higher time frames. It is both a lower time frame and a higher time frame at the same time because it is closer to the 30 minutes and also closer to the 2 hours. You understand? It's close to 30 minutes, also close to 2 hours. So it's like in between higher time frames and lower time frames. And you see setups occurring. The last class that we had, we were using setups from last week. Today's class now I'm going to be using setups from this week, right? This is what I had with my student as like a start. Don't worry, after this class, I'm going to share the trades that they took with you guys. So you guys will see what I'm talking about. This thing works. So long as you have the patience to wait for all of it. You may go 2 days without seeing trades, but then 2 times a week you can see something to trade, which is what's still very okay. At the end of the day, you just want to be profitable. At the end of the day, it's not a matter of quantity, but a matter of what quality. Okay, so back to what I was saying. I talked about identifying what your type 1 or your type 2 type of entries. First of all, right now, most of my trades, I usually take them on the 1 hour time frame. I hardly have to go down to lower time frames, except I'm looking for confirmations based on some things, right? I go below 1 hour when it comes to POI. So the first thing I do is to mark out my structure to see is price bullish or is price bearish. Now, if you look at this particular case here now, this price action up until this point now, let me show you right from when I made this price action, right up until this point. If you look at what was happening here now, we had price moving in series of highs and lows. Sorry, allow this thing to load. Okay. Now this is the 1 hour time frame. All right. You had price moving down, change of character, down. And then what happened? After price, this was the last change of character, and then price started a downtrend, and then changed character again, right? At this point, when you broke this high, mitigating this demand zone. This was the demand zone that price was reacting reacting from. And while reacting from that demand zone, it did what? It broke a lower high and went ahead to do what? To put in another break of structure afterwards, breaking that lower high. So you would agree with me that as at this point, this particular market structure is what? Bullish, right? And if you look at what's happening, this mitigation was coming from what? A demand zone. It's just like a confirmation to this demand level, this mitigation. So price created this demand level and then created what? A mitigation zone, a mitigation on that demand zone. That's another demand zone, like a confirmation on that demand zone. Took out this high, giving you what? Um, a sort of a type of entry that did what? Broke structure, went straight ahead, but created, sorry, type B, created structural liquidity before what? Buying out, then came back, created another structural liquidity, then mitigated and what? Bought to the upside, right? So this can be moves that you would have missed. Or me, I really love my streams to be very quick. So I may not have taken this one now. But then, if you look at this now, price has created the first demand zone, mitigated the second demand zone. This was where we met price in the last class that we had. I think it was on today is on Wednesday. I think it was the class we had on Monday that this analysis was made, right? Now, if you look at this particular one now, price has now mitigated these demand levels. This is 1 hour time frame. And then you spot this pattern. If you look at the pattern I'm talking about, right? We had price take out this low. You can see that the mitigation on this demand zone now took out what? A low. Now, after that low was taken out, it went ahead to do what? To break structure. You can see this new high now. Going above this previous high is price what? Breaking structure. Now, as at this point now, it has not what? It has not taken out what? The previous high for it to say that it has given another structural liquidity for it to be what? A type of entry. But then this is what? A form of inducement. So next thing you're anticipating is to see, okay, does price do what? Would price give us a structural liquidity, which yes, we have been able to what? Achieve here. Price has what? Gone above the previous week, giving us what? A structural liquidity. This is what now? A structural low. Now, if you look at what has happened here now, this is our type of entry. This is what? Look at this. Sorry, let me take this out. This is price sweeps liquidity, puts in a high, pulls back engagement, puts in what? Another high. And I told you that entries like this are what? Our type entries like this are what? Our type A type of entries, right? Something just like this. Price takes out a low, breaks structural engagement, puts in what? This high, and then you're anticipating the order. Price comes back to this point and buys just like this, right? This was just recent price action. I think it was even today or yesterday that this hit take profit, right? Now let's continue. Okay, so you're anticipating that this does this now, but then I told you that when you're done mapping out your patterns on the 1 hour time frame, you don't just trade it like that. Please let me have 1 minute. I need to take water. All right, so sorry for the break. So you're not anticipating that what price pulls back towards the order block at this extreme. But I told you when you're done identifying these patterns on the 1 hour time frame, what do you do next? You validate it on the higher time frame. That's what I meant by down to top instead of top to down. Now you see more trade opportunities on the 1 hour as compared to the 4 hours, right? So, but then whatever you want to do, you want to still make sure that it is in line with what price is doing on the 4 hours time frame. So now you have this now on the 1 hour. What do you do next? You switch to the 4 hours time frame to see what price is doing. Now this is the 4 hours time frame. And clearly on the 4 hours time frame, you can see that what, okay, price is actually reacting from what? A demand level. Like everything that we've drawn now. You can see clearly on the 4 hours time frame that it is very clear. The 4 hours time frame is what? Bullish. And wherever we're looking to, this was like the last swing on the 4 hours. This low towards this high, this entire high, this is where price is what? Doing everything from. I you can see that our demand zone was what? Our demand zone is in the first 50% of whatever is happening between all of this, right? Even if you use this ring here, our demand zone is what? In the first 50%, right? So looking at what's happening at this point, price did what? Price took out this low to mitigate what? A demand zone. And after mitigating that demand zone, what happened? It took out this high, that's a lower high, and did what? Before taking out the lower high, what did it do? You can see, created what? A form of inducement before what? Taking out the high, then came back to mitigate and continue what? To the upside. And you see that this, what is actually happening on the 4 hours time frame is what? Our type B type of entry. That's where price is reacting from, right? So meaning that whatever you're doing on the 1 hour time frame is valid because the 4 hours time frame is what? Bullish as well. Price is coming from what? A demand zone. This is now you being able to what? Align what you're doing on the lower time frame with what is happening on the higher time frame. So which means this is what? Valid to buy from. What do? You click what? Your box, mark out the order block that you're looking to buy from, and what's next? You click on your buy to. Sorry, let me take out this marking. You click on your buy to, place it, put your stop loss below what's that low, and then you target this high or anything internal. When we get to targets, you're going to understand the rest of it, right? And then playing price, let's see what price does as he approaches the what? Point of interest. Let me make this a bit faster. Now you can see price trying to what? Approach the point of interest. And then at this point now, price has what? Triggered the POI. And you can see price has triggered the POI straight to the upside. This is like a recent trade. I'm not even talking about like backtesting or anything. This is something that happened very, very recently, right? And you can see even if you are targeted this external high, what happens? This trade has hit what? Your take profit targets. As simple as that. This is today's price action. Hit take profit target and did what? Started retracing. See? Even if you targeted the external high at this point now, you'd have hit what? Your TP before price what? Started retracing. You can see as easy as that, or type 1 type of entry on what? AURCAD today. Okay, and even if you look at, I think there was something on USD card. I didn't participate in this one though, but then I think Jessica made this particular analysis where it was a short setup. You can see here now. Here's what happened. Price was what? This is USD card. Remember for the sell setups, right? It's just like the inverse of the buy setups. The price takes out the high and then does something like this. Pulls back, gives you a form of inducement, and then pulls back into what? That supply zone and sell something what? Like this. Or in another case scenario, it actually takes out the high and then gives the structural what? Inducement before the failure, pulling back into it and then what? Selling just like this. This is what our type 2 sell model, just like the buys as well. And if you look at this USD card, they dropped it on the group though. It wasn't mine, but then it's the same thing. It's what I taught them that they are using, right? You can see that we had what? This particular range here now at this extreme that was mitigated, right? It was more like price was reacting from this breakup block, right? At this range. And then after that breakup block was created, what happened? There was a mitigation here. You see this week, there was a mitigation to this week. Let's say when I get to refining, I'm going to talk about 50% and all of that, right? But then price mitigated this week, which may not necessarily have been something that I would have traded, right? But then price mitigated this supply range, like the whole thing that was happening there. And then after that mitigation, something very interesting happened, right? I told you that when you have zones that you are unsure of, the best thing you can do when price creates those zones is to what? The best thing you can do when price creates those zones is to wait for what? Confirmation. That is what we're going to do. I think the next class, pattern confirmations and candlestick confirmations is very, very important, right? In price mitigates a zone that doesn't meet your criteria, the next thing you want to do is to what? Wait for confirmations on that zone. That was what I was trying to say when I told you that what invalid demands. When you have a demand zone that does not meet all of your criteria, what do? You just wait for price to mitigate it and then create a demand zone that you can trade from. The same thing when you have a supply zone that does not meet all of your criteria, then what do? You just wait for price to what? Mitigate it and create what? A supply zone that you can trade from. In a case like this now, there was a mitigation to what? This supply zone. Now, after price mitigated what this supply zone, you can see this was what happened. Created this low and then created this high, right? This was what happened on the 1 hour time frame. Now, can you see that after the high was created, right? There was a sweep to create that high. There was a sweep here to mitigate that high. Let me change this to red so it's more visible. All right. There was a sweep to mitigate the high. And after that sweep mitigated, the next thing that happened was that price actually broke down to break structure, right? Sorry, let me take this out and start afresh. Look at what I'm showing you. We had, let me use an highlighter instead, right? We had price pulling back into this supply zone with what? Lower highs and higher highs and what? Higher lows. Higher highs and higher lows, right? And then what happened? Price put in what? Another higher high. It's more like a change of character, right? Putting another higher high by what? Sweeping the previous high and then running through to what? Create a low, which is what? More like our type A. When price takes out a high, puts in what? A new break of structure and pulls back to create what? A structural inducement and then another low. This is our type 1 type of entry now. The one that looks like this. Right? This is our type 1 type of entry on USD card today. So when you see something like this, where is now your entry? Your entry is what? At this point. At the what? The level of what? The other block. Okay? What do you do next? First thing, after making your analysis, you want to go what? You want to go to the lower time frame, the higher time frame, sorry, to make sure that whatever you're doing is in line with what? The 4 hours time frame. Okay, so now I'm going to switch to the 4 hours time frame to see what price is actually doing on the 4 hours. Now, if you look at the 4 hours time frame now for this particular pair, you can see that price has been what? Price was coming in a series of what? Lower highs and lower lows, because at this point now, this was what? A low that went below this previous low. So you want to take out your this thing, your premium and discount tool to see, okay, the whatever I'm doing is actually what's in the premium of price. I think this was but let me mark out the structure from beginning to make sure I'm not mistaken. Here we had a higher low, a higher high, higher low, higher high, higher low, then a higher high, then another higher low, and was a higher high. So this was the point at which price did what? Price changed character, right? So the point at which price changed character, and then the change of character created what? Another confirmation to show that what? We're bearish. Okay? So you can see that at this point now, price has what? Changed character and then does what? You see what? The confirmation that what? You're bearish for now, right? So which means that what you're doing on this time frame, what you're doing on the 1 hour time frame, trying to sell on the 1 hour time frame is what? In line with what price is doing on the 4 hours time frame. The 4 hours time frame is what? Bearish, meaning that your sales on the 1 hour time frame is what? Valid to do. That is what I meant by making your analysis on 1 hour and validating them with what the 4 hours is doing. You want to make sure that at the end of the day, you're in alignment with the 4 hours time frame. Now, you've had your setup that has met what? Your pattern, everything complete. You validated it to the higher time frame analysis. And then what you do? Playing next, you can see that price did what? Price now pulled back to what? To the entry, mitigated and what? Started dumping, right? Mitigated the entry what? And started dumping straight to what? Take profit target. Even the FOMC news this evening took it way down, right? If you were targeting this extreme, you would have still what? Made more. You can see as easy as this. the same thing. You just do your work on the 1 hour and then you go what 2 to 4 hours to make sure that the pattern recognizes what in line with market structure. I think there was one other pair as well that they took is it let me see, is it JPNZ DRB? Can't even necessarily remember. There was three setups. Can't remember all of them though. But then there's something on this DPNZD. But I don't think it was this particular pair because the other setup was a buy.
I think
Right?
NZECHF. Check this.
What do you say?
Check NZECHF. I think that was the one you used.
NZDC.
Yes,
Okay,
check it.
okay. Because I knew that there was another pair that made an analysis on that played out, right? But then before I continue that, let me just complete because I've already seen the pattern play out on this particular pair as well today, right? I can see that just by looking at it in the sell scenario. Now you had price coming what series of what higher lows and what higher highs. Here you have what here you have a higher high, higher low, higher high, higher low, higher high, higher low, higher high. And then what happens? You can see that what price changed character at this point because you feel what a protected low. At this point, you guys should not be new to the concept of protected and targeted lows. This class is going to exceed 10 p.m. I'm sorry about that though. So this is what a change of character at this point, indicating that what price is bearish. And then you can see that after that, what happens? We had what another break of structure to confirm what that indication on this time frame. The price is what bearish, right? But then if you look at the whole thing with the break of structure and all of that, can you see our type B type of entry? Although it later like moved to form type A by creating this change of character. But you can notice what our type B type of entry, whereby price does what? Price sweeps, and after that sweep, it impulsively does what? Comes here to create what a form of inducement before what breaking structure, right? But then in this case now, it later pulled back again to create what another structural inducement, right? Putting in this low before what finally pulling back. Now something like this now, you already have what your analysis. What do you do? Let me cut price back to when this was not formed yet now. Now you have something like this on the 1 hour time frame. This is what's like your pattern, your type B, or in this case now this is already type A type of entry. And then you're looking to take your buy position from this order block at this one, right? What do you do next? You go to the what? To the you go to the 4 hours time frame to ask yourself, what I'm doing, is it in alignment with what is happening on the 4 hours time frame? Because there will be times whereby you can think you're doing the right thing, and then the 4 hours time frame now is showing you that okay, what you're doing is what is not safe. Like in this case now, yeah, you can see that on the 4 hours time frame of this now, this particular pair is bearish, is bullish. Sorry, this particular pair is very, very bullish on the 4 hours time frame. You can see series of what you can see series of what higher lows and higher highs, higher lows and higher highs, higher lows and higher highs. So this is a bullish pair, right? But the marking out from the last swing that we had, right? You want to make sure that what you're doing is in the premium. Actually, it is in the premium in this case, right? If you look at what's happening here now, this particular supply zone is in the premium. So it's more like you're doing what? You're using a supply zone, you're catching the retracement on this pair. You know that when price is moving in an uptrend there, it's moving like this. We have expansion, we have retracement, we have expansion. Do you understand? So expansion, retracement, expansion, retracement. So it's more like you're catching what's the retracement. So you can see that on the 1 hour time frame now, the 1 hour time frame is showing that this particular pair is bearish, right? But on the 4 hours time frame, it's not bearish yet. It is actually not bearish yet because it was a mitigation of what this whole demand range, right? This is like a bullish mitigation at this point that is coming. So it's more like you taking the confirmation that okay, what you're doing what is still what the sell is still what in the premium of price, or the buy is still what in the discount of price. just like that. So it's still valid to take this sell because it is what in 4 hours premium. If it was in discount, like more like when you come onto the 4 hours and you notice that okay, price is coming from a demand zone and it's still what a discount, it wouldn't have been what safe to take a sell from here. But then going back to the 1 hour time frame now, since you're what in the premium of price, that is what you try to watch catch a retracement before price decides what to expand. Now what happens? Playing price, let's say now you take what your sell position to place it on the what on the order block, putting your stop loss just above a high and then targeting maybe you can even target this low price to take out this low. This is like an equal low. And it's a form of liquidity and then playing price. Price mitigates your entry and does what? Okay, this is okay. Straight to what take profit targets. Right? Equal lows as liquidity that you're anticipating the price is going to clear, right? This is an imbalance that price would be attracted to. Your entry, simple as that. Your type A type of entry. This is what happened this evening on GBP NZD. It's not like I'm taking you back to price action of 1999. And even if you go back to price action, you notice that what this is of high probability. These are trades that occurred this week that you would have what participated in if you're able to what I'm not asking you to go and execute trades, so I'm just saying, right? If you're able to what recognize these patterns, so you need to train your eyes to be able to what to see these things. Let me check the NZD CHF if that is it. First, I remember that there were 3 setups that we took on the like a star group. So let me put it off. I don't know. I don't remember if it's on this NZD CHF. Oh. Was it a buy or a sell? Because it has to be a sell now. Are you sure it's NZD CHF? Because yeah, I'm just seeing a model, but then it was not properly induced. So I don't think they would have taken this. I don't think it's this. But then
I think it was, but I think it was a buy before the sell occurred that day.
Yeah, it was a buy. It was a buy setup. Yeah. It was a buy setup. I just can't remember like which of the pairs it was because it was 2 sells and 1 buy. Okay, but then let's look at I think something. Did I just check JPNZD? JPNZD. Okay, this was what we just checked, right? So something happened as well on GBP AUD. Same correlation. Now looking at this GBP AUD, I don't think I have to say anything for you guys to recognize what happened there. Look at what I said on GBP NZD. You can notice our what you can notice our pattern. Most of these pairs are correlated. I think before the end of the curriculum of this class, I'm going to talk about correlation of currency pairs. If I forget, somebody should remind me, but I think I shouldn't, right? Now, if you look at this now, you can see this particular pattern in GBP NZD. If you go to GBP AUD, you'd see what the exact same thing in GBP AUD. What happens? Price takes out what? The level, right? Price takes out what? This level as per change of character, and then it has not taken out this particular level. This would have made it like more riskier to take as compared to the other one because at this point, this particular level has not been what swept for it to confirm that price has changed character. But then you can see what our type A and B type of entry, whereby you now have what inducement created before price would break structure, which does not need what a second break of structure yet, right? But in the case that this is what a reversal trend, because price was coming what bullish at first, it would have been very important that what this gives you another break of structure before you would place, just like what the GBP did. You saw that he had another break of structure before price retraced to entry. If not, this is what of lower probability down the other one. But then you can see now type B type of entry on GBP AUD this evening. This is not far-fetched. This is what today's what price action as well. These are like 4 pairs that I've shown you that has played out today. Imagine having other pairs on your watch list, right? And you've been able to master and recognize these patterns. What happens? Price comes, mitigates, and what sells. Price comes to your entry. What do? You validate it with what is happening on the higher time frame. And then let's look at the higher time frame for this one. Now you notice that this is what a retracement move on the higher time frame. Maybe okay. Look at what's happening here now. You can see that for the higher time frame now, price did what? This was a low. This was the low, and this was the high in question before it was taken out. So if you mark out this low to this high, you notice that whatever you were doing was what was in the premium. That's what I mean when I say you're validating what with the higher time frame. Your sales on the 1 hour should be on the premium of what the 4 hours. Even if the 4 hours is bullish, it should be what's in the premium of that bullish move. Or the 4 hours should be in a downtrend as well. Or your buys on the 1 hour should be what in a discount of the 4 hours. Or the 4 hours entirely should be what's in an uptrend as well. Just like that. So you want to make sure that whatever you're doing now, instead of waiting for years for this particular thing now to maybe create a valid demand zone for you, or wherever level you want to create the demand zone, you're able to what? To catch moves on the 1 hour, correlating it with what? This market structure. That way you're not waiting for years to what? For trades to be for your trades to trigger, or you're taking quality trades that are what's being correlated with what is happening on the 4 hours time frame, right? So this is it about the entry model, and then going to the higher time frames to validate them, right? Now, for the reclaim blocks for continuations and reclaim blocks for entries, I would need to emphasize better on it, just like I've done for this entry model. I want our next class to be on these reclaim blocks for entries as well, because they're very important entries. You know, these other blocks, there are times where you have price meet all of your criteria, and then your other blocks still fails. You just have an edge in the market. You don't have a holy grail that has curbed 100% of your losses. This gives you a good win rate, right? This gives you a very good or very high win rate, but it doesn't give you like a 100% win rate. So there are times whereby you can have your type A's and type B's, and then price still takes you out, which now gives you what? The reclaim blocks as your entries. So it's still very important that we emphasize on these reclaim blocks as entries with proper examples, just like we've done for this one now. So that's what we're going to do in our next class. Reclaim blocks for entries, reclaim blocks for continuations, and then if there's still time, that session, we're going to talk about confirmation entries, pattern and candlestick confirmation entries. So you see that it's getting very serious now, right? It's no longer all of this. This is now about putting it all together. Like I said the last time, this is what the beginning of the end of the class, right? So it's important that these classes, you attend them live and you go back through recordings again and again. Emphasize on it until your brain catches everything. Now, I want to talk about something very important. Sorry, I know this is past 10, but then just bear with me. We should be done very soon. All right, I want to talk about something very important, which is, there are case scenarios whereby you have price coming in an uptrend, right? And then you have your valid demand zone at this point. Let's say this is what a valid demand zone that you want to buy from. All right. Now, the retracement back to entry can be something like this now, which in a case of actually marking out market structure, it can be said that this market structure is what? That this market structure has now switched bearish, right? Why? Because of the fact that price has changed character, giving a confirmation of the change of character, which in a healthy market, this is a healthy pullback to mitigate a demand zone, right? But then you can't tell between healthy pullbacks and price actually changing character, because something like this can just happen, whereby price maybe does something like mitigates this and continues selling, right? Now, what I want you to do is, for every time the price pulls back to your entry, for you to know if that entry, or let me say that demand level that you're waiting for confirmation on, for you to know if that demand level is a demand level that is going to hold, price must take out the previous lower high. more like this. You want to see something like this, giving you what the same illusion of what or the same image of what our sweep and our break. Something that don't worry, when we get to confirmations, we'll talk about that, right? But then you want to see the previous lower high taking out before you see that this is not what a change in trend. When we get to confirmations, we're going to talk about that one clearly, right? Then it is important as well, like I said, when you're using your type 1 and type 2, they're not just like models that you just like identify. It is also very important to what check them out 24 hours time frame and also check where they are coming from, where price is coming from. You know, when price is coming from a 4-hour supply zone, just like this, it is what it's not going to be easy for a 15 minutes demand zone to what to hold price. Do you understand? It will most likely be what be swept. So where price is coming from is also very important, or a very important consideration when you're making entries, right? Where price is coming from, where price is going to. Okay. So whatever you're doing must be what's in line with the trend. Better to be in line with the trend. As time goes on, you're going to get used to counter trading. You will even get tired of itself, right? So I want you to be that whatever you're doing now is in line with the trend. When you achieve a certain level of profitability, you can start putting your hands in other dirty things, right? All of those try to catch counter trend and the rest of it. But for now, just do what will work for you and what will fix your psychology to a good extent, right? So this is where we're going to stop for today's class. It is long already, so if you have any questions, just drop it on the Telegram group. I'll make out time midnight to answer all of them, right? The recording is going to be dropped on the group as well. So go through the recording. No assignments for now. I'll see you guys again 9 p.m. on Friday. So you can hear the recording. Thank you so much.